Here to explain how to do it, the best pathways for retail investors as well, is Dani Ecuyer from Shareplicity. How are you doing, Dani?
Good, thank you, Aaron. Thank you for having me on the program.
Yeah, absolutely. For my birthday a few weeks ago, I got one stock in Disney, and I don't know what to do with it. Talk to us about the 4 US indices, the Dow, the S&P 500, the NASDAQ, and also the Russell 2000. Where's the best place to put your money if you were to head to the US markets?
Well, at the moment, it's been very much concentrated in the NASDAQ for all the reasons that you have just actually been discussing with your guests. They're the technology companies, they're the companies that are growing in the time of this awful virus and this awful pandemic. And if anything, they're actually getting stronger. The other indices, such as the S&P and the Dow, they have a different slant. The Dow in particular is some of the older companies in America. They are more cyclically based, so you are talking the likes of McDonald's, Walmart, I think Disney is probably in there. And the S&P 500 represents the largest 500 companies listed on the US stock exchange. So that gives you a broader representation of the US economy. So when you look at them all, you have to actually work out which exposure do you want, which is going to give you the best returns at the moment.
Now, NASDAQ hit an all-time high this week. President Trump was tweeting about it as well. The US pretty proud of the NASDAQ and how that's been going. Tech stocks doing so well. You think of Zoom during all of this too. Why would you invest in US tech stocks as opposed to the wise techs in Australia, for example? We know that the ASX launched just a couple of months ago, that real kind of tech side, tech version of the ASX, a NASDAQ down under if you would. What's the US benefit compared to going local? And it comes at a time where headlines this morning about Australian superannuation funds actually trying to get out of our local tech stocks.
Oh, really? I hadn't picked up on that. I think you buy US shares because you want, first of all, exposure to a different market, and it's called diversification. There's no doubt about it. The tech stocks over in America are really at the cutting edge of the face of change at the moment. Zoom, a year ago, hardly anyone had heard of it, and of course it's been boosted by the pandemic. Domestically, there are very good tech stocks here as well. And I think investors need to think, is it an either or could I possibly have both? To date, the US stocks have really outperformed the Australian ones, with the exception of possibly Afterpay. So it goes back to the individual, how much money you have, and whether or not you have the ability to gain some exposure to the overseas markets. If you can, I think it is worth it.
Now, where do you start? If you're an Australian investor, what do you need to do? Can you do it through Australian portals? Do you need to look towards overseas? How do you actually start your investment journey in the US?
Yeah, great question. And it has changed dramatically even over the last 5 years. There are now so many different avenues for the retail investors. Once upon a time, it was only the domain of the rich that actually could call their stockbroker and say, buy me some Berkshire Hathaway. For the retail investor, one of the most easy routes is to buy a US ETF, exchange traded fund, that's listed on the ASX. If you want to go and actually develop a US trading account, you can do that on the online platforms. That will open up all the markets to you, but you have to buy US dollars. In buying US dollars, you are taking a currency risk that you won't necessarily get in the ASX listed ETF. Alternatively, there are a number of listed funds and fund management products with the active fund managers in Australia, which will also give you exposure to the US. So really there's three broad platforms.
I reckon I could guess the one question you get asked a lot at the moment, which is it too late? Have we hit the bottom? Is now the time to actually get involved in the stock market? You think of what's happening on the Shanghai Composite at the moment. The Chinese investors, the retail investors have hit the ground running very hard in recent days, things going gangbusters there as well. You compare that to the fact that Melbourne's going back into isolation lockdown too. What's your view? Is it now the time to invest, or should people be a little bit more wary? Have we hit the bottom a couple of months ago? We've heard from the RBA yesterday saying the worst is over. What's your thoughts?
Again, you have to be very stock specific. I personally hold a lot of what I call the virus stocks, particularly in the US. Those are the companies that are benefiting, and it sounds awful, but they are,
Yeah.
from the type of pandemic conditions and the
But Zoom's a
lockdowns,
really interesting
particularly.
one though, right? Let's talk about some of the stocks. So I look at Zoom, I look at
Yeah,
Netflix, and Netflix and Zoom have done
yeah.
hugely well with people isolated at home, watching more content, having to work from home. But the second the lockdown ends, they have said to the market, expect things to change. So when you're looking at those sorts of stocks, should you be careful or will they always go up? Because we're also being told that work is changing. Not many people will be going back to the office, that you don't want to be involved in commercial real estate. What's your view on that question?
Aaron, I think my personal view, and I'm not a registered advisor, but my personal view and my own personal positioning of my portfolios is that we are seeing massive structural change in our economies that will go well beyond the pandemic.
Yeah.
I don't think Zoom is going to disappear. I don't think Netflix is going to disappear. All of these companies, you can put all the big names, Apple, Amazon, um, uh, all of them, Tesla even, they are actually changing the world. They're very large cash flow positive companies that are actually, as my son described, Amazon is like Pac-Man at the moment in terms of what they're buying. Now, of course, this could attract antitrust legislation, that you're going to see a number of hearings coming up, but companies have survived that in the past. So in terms of buying them, I think you have to take a longer term view. Okay, maybe you don't buy them tomorrow, you wait for a pullback. But in terms of the technology and the change and the rapid pace of the evolution of these companies, even data, what you were talking
Yeah,
about
yeah,
before
yeah.
with TikTok, like this trend is not going away, in my humble opinion, and experts that are much smarter than me, we are seeing a massive acceleration that actually has been spurred on by the pandemic.
All right, Danny, really appreciate your time and your insights. Thanks so much.
Pleasure. Thank you, Aaron.